Hello everybody. So I am updating my spreadsheet for stocks who just reported their earnings, namely three stocks I updated today: Zeta and TransMedics, of course, just reported their earnings. SoFi reported their earnings a few days ago. So I just want to briefly talk about these three stocks. These are three stocks that I like. Totally different sectors, of course. You may only be interested in one of the three. And then I want to briefly talk about MSTR and STRC, because STRC is slowly bouncing back, slowly getting back to 100. And so people who bought it when we went into the lows may be winning their bet if it gets back to 100, which I believe it will eventually. So anyways, let's get started. Zeta, absolutely outstanding performance, up 11% today. Actually, if you look at the past 5 days, and of course, last week we had some peak fear after the Fed meeting and the sell-off, the AI sell-off induced by perhaps Citadel, who knows, allegedly. I don't really know who is responsible for that sell-off, but we had such a huge drop. It's crazy to see the stock back up 26% in a matter of 5 days. For a stock who's just firing on all cylinders, I've covered this stock for a little while now, maybe 6 months on the channel. I've covered this stock, maybe about that. So it's the 20th beat and raise in a row. They actually gave a number. To my knowledge, this is the first time they gave this number. 535 million folks globally is who they track. Now, I had listened to interviews of the CEO where he talked about more people. So I don't know if it's like clearly identifiable people that are 535 million, but I saw a few interviews where he talked about 1 billion people. So I don't really know what that's number, but that's essentially the moat of Zeta is that ever since cookies and tracking became more difficult since the Apple updates, you have a company who's developed a new method of tracking people and targeting people with marketing and following people through their internet, through their journey. And that's the moat. That's their ability to access 535 million people and serve them marketing. That's the major moat that Zeta has. And of course, the partnerships that they have are very reassuring. You have the Palantir partnership, which is doing very well. And then they have a Snowflake and an OpenAI partnership. So they're partnering with a lot of big names. That's a lot of validation. And of course, the big thesis is AI for Zeta and the rollout of Athena, which continues. It started last quarter, it continues, and Zeta Business Intelligence. This is a company who has a strategy for marketing who's top of the funnel, focusing on big companies first and selling their marketing solutions to big companies first, and then moving to smaller, medium-sized businesses. So very much a strategy similar to Palantir and how Palantir started selling to major corporations. I've called it the Palantir of marketing. I continue to think that this is the thesis, and the thesis is developing really well for Zeta. Most importantly, why do I like Zeta on this channel? Why do I like a stock on this channel? I like a stock because a stock is cheap. Right? I don't cover Palantir anymore because when I put Palantir in my spreadsheet, I get a nosebleed valuation. When I put Zeta in my spreadsheet, I get somewhat of a nonsensical, for a stock who's shaping up to be of this caliber, I get a somewhat nonsensical enterprise value over gross profit, over revenue growth of a 0.2. Rule of 40 is a 61. This stock, in my view, is too cheap for something that's, of course, beyond software, because you have a moat, which is their ability to track 500 million people. That's a moat, that's a network, that's something that other companies don't have, and you just can't spin up an AI and track these people. So I think this company has a durability, and I think over the medium term, this is going to be a winner. I am happy to own Zeta stock and pleased to see these results. Moving on to TransMedics. So TransMedics, more of a mixed bag. I've been covering TransMedics for how long on this channel? Maybe 2 years, maybe 3 years. That's the problem. A lot of these medical stocks have been disappointing. The money has moved to AI. They're all chasing AI, and medical innovation has been somewhat disappointing. This is a company that has a game changer type of product, a product that saves lives, a product that allows you to use organ transplants for a much longer period of time. With their organ care system. Really a sound thesis, if you ask me, a sound thesis. But the problem is that it's going through some growing pains right now. It's a steady Eddie type of stock. It's still cheap at a 0.3, but not as cheap as a Zeta. Rule of 40 is a 52. To me, the one thing that this stock has had for the longest time is the predictability, and the predictability continues. So they had a 10,000 transplant target to 2028. That was their long-term guidance. They updated that guidance. Now what I like about this stock is the predictability. The guidance is for 30,000 transplants and 2 billion in revenue by 2032. And so you have a stock that has 669 million in revenue, 2 billion by 2032. So that's, a 3x in size in terms of revenue by 2032. And of course, they've reached their targets sooner before. They just raised the lower end of their guidance. So I still think this is a growth stock. I like the stock. I think the valuation's okay at 0.3. You can find cheaper. I mean, obviously Zeta is cheaper. You'll see SoFi. SoFi is slightly cheaper too. There's quite a few cheaper stock. The one thing that I dislike on this stock and makes me a little wary is the CMS and the CMS pressures. And the issue is of course it's reimbursed, right? So it's sent. CMS is Medicare in the US. They reimburse. They set the prices. And every year, these stocks get battered because there's a risk, of course, that CMS negotiates and pays less for the service. They also had some uncertainty on their trial. Some uncertainty also on aviation costs, on when Europe is going to take off and when they're going to enter Europe in a meaningful way. So there's overhangs on this stock. I like the long-term guidance very, very much. The valuation is okay. I wish it was cheaper, but the CMS I don't like. And on this channel, I've been wary of stocks that rely on reimbursements. But nonetheless, this is one of the darlings of retail, right? There's a lot of retail investors who follow TransMedics, perhaps more closely than I do. This stock, still has to move. It hasn't moved, right? Down 42% in 6 months. It hasn't moved. It's in a little bit of a valley of despair. That quarter didn't do it. Maybe the next quarter is going to do it. Moving on to SoFi. So SoFi reported a few days ago. The reason why I want to report on SoFi again is I updated the valuation of the spreadsheet. So enterprise value over gross profit over revenue growth is 0.21. So that's dirt cheap, right? As cheap as Meta, more expensive than HIMSS. Rule 40 is a 67. Of course, SoFi, feel free to go into the investor presentation. It's just firing on all cylinders. Like every metric is heading in the right direction. Every metric is growing, and it's growing steadily in one direction. More members, more revenue, more products sold, more money on the platform, more people using SoFi Plus. This stock, the underlying fundamentals of this stock have been very steady and very predictable. Unfortunately, the stock hasn't done too well because it trades in lockstep with interest rates. It literally trades on interest rates. So there was a little bit of FUD a few days ago about on X money and X money potentially taking business away from SoFi. I don't really buy that too much, but maybe it could. I don't know. But the truth is, SoFi, of course, raised their outlook. I think it's something like the 20th time, or it's at least a dozen times in a row that they raise the outlook. So that's a pretty big deal. And what I would say is that the next catalyst for SoFi is, of course, the rates, the interest rates. In their guidance, and when you read the call, they made a point to say that they expect 2 rate hikes in 2026. 2 rate hikes. So how many rate hikes do we expect in 2026? Do we think there's going to be rate hikes right before the midterm? I continue to think that we're not going to get a rate hike before the midterms, especially if the Middle East situation resolves. Remember, they reported at a point where the Middle East was back on full conflict mode. It seems like we're moving away from that again, at least for a few days, right? Maybe a week, maybe 2 weeks. I don't know how long that's going to last. But in my view, if we end up getting no rate hikes, this stock will re-rate. And of course, the 10-year, if you look at the 10-year has had a nice little drop. I mean, over the past 5 days, it has had a nice little drop. We'll take it. And in kind of simplistic frame of thought of Wall Street and how Wall Street often looks at these stocks without much analysis. It's the whole situation. And, you still have people who think SoFi as a student loan business, and it's still mostly a lending business, but, I would argue it's half and half. It's becoming more and more of a services and a fee component, still slightly more of a lending business. But what Wall Street assumes is that if rates go up, the demand for loans goes down. If rates go up, less people borrow money, right? And if rates go down, more people borrow money. And so if rates ever were to get back to like a 3% or 2%, this is a stock that would likely see quite a big price appreciation, because, of course, if the interest rates on personal loans drop to, say, 3 or 4%, like they used to be not too long ago, the demand for loans should go through the roof, and a company like SoFi should greatly benefit. So it trades kind of inversely with interest rate. It trades inversely with the 10-year. And so this is a stock that's kind of a bet on the rates going down. And the stock is cheap. EV over GP over RG is a 0.21. Rule of 40 is a 67. And let me conclude with not really a stock, more of a preferred and more of a stock that I've covered extensively on the channel. It's Stretch. Let's talk about Stretch and MSTR strategy. And you can see Stretch and MSTR strategy bouncing back nicely the past few days. Stretch actually almost hitting 94 today at one point. And so my point on this is that do the people who bought it in the 70s when we had the peak FUD on STRC a few weeks ago, will these people end up winning? It sure seems like it. And what's funny is Stretch is going back up, strategy is going back up. And, why is that happening? Well, I believe this is happening because Bitcoin is going back up. Fear and greed, we're only 1 point away from neutral. And Bitcoin's going back up, and the 10-year is going down. So if the 10-year goes down, if rates go down, naturally, the preferred instruments, the digital credit instruments of Saylor naturally should go up in value. And so this was always the macro in my view. Saylor has just been waiting. I love to see this coming back up. As the rates come back down, the more the rates come down, the more we should expect digital credit to come back up in value. And of course, Bitcoin, the more Bitcoin goes up, the more the Bitcoin backing the credit goes up in value, and the more the BTC rating of an instrument like Stretch also goes up in value. So that's also a positive for a big stock that I cover in this channel. It's a positive to see it up there. Of course, we have a long way to go to get back to where we used to be. But anyways, these are, entirely different stocks, but a few updates, a few things I wanted to say. Let's see how we end the trading day. This was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.